We're live. Hello. Welcome back to the Dapper Dividends live stream. Call this here the Dividend Dive on Sunday, and I'd like to welcome you once again. Well, I've got a lot to talk about, and we can go whatever direction you want. I've been reading some interesting things. I'd love to chat about the Robinhood tokenization. SoFi's doing it too. If you don't know about it, I think it's really crazy. Robinhood jumped again. If you guys want to talk about that, I don't know, Janice, did you read The Income Factory? Did you start checking that out? This guy right here is a kilo. I got to block everybody here. There we go. 1 kilo of copper. And yeah, I had dozens of these things, heavy as hell. So we got new tariffs on copper. And I was going to put it in the back there, but it's a kilogram of copper. And I was thinking like, wow, if this is what a kilo of cocaine weighs, like that's crazy. That is heavy. But it's kind of like what weighs more, a kilo of feathers or a kilo of copper? Duh. It's all the same thing. It's a kilo. Yeah, I bought those years ago when I was in my precious metals and metals in general phase. And like I said, I didn't even look at the price, but copper prices shot through the roof. And yeah, I don't know if anybody told the president, but you can't just switch on a copper mine. It takes decades sometimes to be able to get copper mines up and running and going. Yeah, so it's kind of interesting, but we oh, nice, Janice. Oh, good. You've been reading it. Sweet. And you asked Ryan and Ari the question, what is the difference between income and dividend investing? I think they're kind of one and the same. I don't know exactly what you're referring to, but I don't know, like passive income, that's just income. If you're investing for income, you're investing like dividends, right? I would think it's the same. I don't know if you're throwing a curveball, screwball trick question, but yeah, I think Boaz, you're going to announce about the copper. So we'll see. It's just going to make, if it sticks, it's going to make everything that uses copper just overnight, instantaneously more expensive for people in America. Oh, Bubble, you're reading Income Factory too. Yeah, it's funny. I've been thinking of, you guys know I don't do drip. I just don't like having fractional shares. It's probably a stupid thing because with Aries Capital, every time I get a dividend, I look at it and I say, my cost basis is in the 18s and it's 21, 22. I'll wait for it to come down a little bit. And it doesn't. So, Alfredo, what's going on? Nice to see you. Yeah, so I'm thinking of turning the drip of it on because I like to collect the dividends and then I cut it with new cash, and then we'll just target strategically invested in something that we want to. Hey, Kevin Hawthorne, what's up, man? From Lakeland, Florida. Where's that? Up north a little bit, right? In Eddie, I think you're using voice to text, but you're buying. I don't know what a whole share is. I know what a whole share is, but not a hole in the ground share. I don't know if you guys have seen this, but oh, you know what? Let's start with something fun, and we'll do news too. Don't worry whenever Steve pops in. But I was playing this game last night, and it's called I Should Have Known That. Right. It was fun. We had a fun day with the family, extended family, went walking around downtown St. Charles, ate lunch out and had a few drinks. We were playing this game at night. I should have known that. And one of the questions was this: what company owns YouTube? We were split into two teams. And it's funny because everybody on my team said, Google. Yeah, it's Google. I was like, no, it's wrong. It's Alphabet. And a couple of people, like my brother-in-law, was like, it's Alphabet. I've never even heard of Alphabet. I was like, trust me, it's the parent company. They own Google. They own YouTube. It's Alphabet. So everybody was like, well, you're the stock guy, so we'll go with you. Okay, Alphabet. Flip it. Nope, wrong. It's Google. 5 points. You lose. And I was indignant about it. I was like, no, it's wrong. I get out my phone. I'm showing everybody, but they're like, we're going to go what the card says. So For the makers of I Should Have Known That, which is Huggy, Hugge Games out of Poland, just saying, hey, you might have to do a little bit more due diligence on that one because it's freaking alphabet, and I'll it's a hill I'll die on, you know. But yeah, so let me share this with you guys. This came out recently, and I don't know if any of you saw it, but it is something that I think is just one more. Oh boy, no, not that. This is what I want to share. This so Vlad Tenev from Robinhood. Boy, I just heard my accent in that one. From Robinhood. What they're doing here, and again, if you don't know, is that I'm not going to play the video. Just get it a little bigger for you there. So the whole idea behind it is that Robinhood wants to give access to. Sorry, I'm seeing myself blocking that. There we go. No, too far. Trying to make it all. There we go. Okay, I think we're better. What Robinhood is trying to do is to tokenize. They're trying to give everyday investors to private companies. The two that they talk about in this one are OpenAI, which is funny because it's a non-for-profit right now, and SpaceX. And what they're doing is Robinhood is essentially buying a stake, a small stake, taking an equity position in OpenAI, in SpaceX, and then they're issuing tokens to represent their stake in OpenAI, say. But the thing is that it's tracked on the blockchain, and you can buy those tokens and buy and sell those tokens. But you don't have any interest. You don't have any ownership in OpenAI when you own their tokens. It is literally just speculating on the price. And I don't like it. I think it's just one more casino aspect to the stock market where everybody wants to just trade price. Everybody wants to be price speculators. Everyone's focused on price. And I don't know when it's going to end. I could be wrong. I had tweeted, I had blossomed out, right? I had blossomed out about Buffett and Munger were wrong. In May of 2018 at the annual meeting, Charlie was calling Bitcoin rat poison. Warren was saying that it won't end well, meaning Bitcoin, and it's only up about 1,000% or something. I think was the number I put out since then. Right? It was at 8,000 or something. Now it's 118,000, whatever it's doing. But, dividend investing is out of favor right now again. But, Brian Bollinger wrote about this in the Simply Safe Dividends newsletter. And I love it. I'm glad that he did, because actually I'll show you that. He showed how it's, man, what is going on here? You see, I still haven't done it. I still haven't gotten rid of this guy. Ben, we love you, but the autofocus from my camera will focus on me when I stop making eye contact with you. So what am I doing? I'm presenting this to you. Let's go to, let's do news. There's 43 of you here. We'll get the news done early and out of the way, just because I like you. And then I can move on to an interesting chart that Brian Bollinger shared. So here's the news. Should be quick. A asset income and growth fund by Nuveen got dividend downgraded. The real Nuveen real asset income and growth fund, JRI, downgraded to 20 and safe. Closed-end funds, some of you do this. I know Jeremy from Dividend Stockpile likes to do closed-end fund investing. They refreshed their outlook on Arbor Realty, ticker ABR. I remember we talked about them, that their CEO had been buying, then they cut the dividend, but they have a 20, very unsafe. Enterprise Products Partners, ticker EPD, on July 9th, raised that distribution. Remember, they don't pay a dividend. They pay a distribution because a portion of that, or a good chunk of it, is return of capital, but it is the good kind, not the destructive. It is constructive return of capital, not destructive, because their net asset value keeps increasing, which is what my big stickling point was when people said that yours truly was misrepresenting, like OMAH, the return of capital, saying that it was destructive. They're just giving you your own money back. If the net asset value is decreasing, they are giving you part of the investment, part of your own money back. So EPD gives you your own money back, but it's coming from real profits, actual tangible business profits. So it is a good thing because the stock price keeps going up. Yes, they issue some more units, some more shares, but right, because when it's an MLP, master limited partnership, from what I understand, you don't own shares, you own units, and you don't get paid a dividend, you get paid a distribution, because when something has a significant return of capital, which is used as a tax classification, you don't pay taxes on it until you sell the shares or your cost basis hits zero, and then you start paying your ordinary income tax on which is long-term capital gains, I should say, on those distributions. So if that sounds confusing, it can be. Took me a minute to figure it out, but they raised that distribution 1.9%, and it is the good kind of return of capital. We like enterprise products partners' return of capital. I thought it said Kanye. Kane Anderson Energy Infrastructure Fund, which is an energy MLP, upgraded to 50, borderline safe. Nice to see that. A couple more here. Marsh & McLennan used to be owned, I believe, by Berkshire. Raised that dividend 10%, insurance broker. And dividend downgrade for the Aberdeen or ABRDN. I don't know. I said Aberdeen. Sue me. Don't sue me if it is. I don't know. Their net asset value is sliding further. Why? Because they're probably not able to cover the payout of almost 14%. So they're giving you your money back, which is decreasing the net asset value, which is my guess there. They refreshed their outlook on BIPC, the gas utility. Brookfield is all over. I thought they were too hard to understand, Brookfield Partners, but I think this is another wing of them, or another tentacle of Brookfield. Another closed-end fund, PIMCO's Corporate and Income Opportunity Fund, PTY dividend upgrade to 50, borderline safe. And the last one is a advertising company. They're having trouble finding clients. It's starting to dry up. I think AI is really going to cut into that. I know Meta talked about having AI-generated ads, so that's hurting them. So dividend downgrade. And then the last thing I was going to share with you on the newsletter, and I'll get to this in a second. This came out this week, and I think I'm zoomed in here. I love it because, to just summarize, Brian Bollinger, who I've gotten to know a little bit, is the owner. He's one of the people behind Simply Safe Dividends. And he just wrote up a fantastic newsletter about owning the business. And we want to look at the fundamentals because over time, that's what's going to matter. And he shared this, that after the April 8th bottom, right, after the market went cuckoo and just fell through the floor, I got excited. This is the returns since April 8th. SCHD, only 10%, while the S&P 500, 25%, the NASDAQ, 33%, the Dividend Aristocrats, right down there at 11%, the Mag 7, 37%, and NVIDIA, a whopping 64% return since April 8th. So he just went on to share about McDonald's and how investing in a good business over time, the fundamentals always matter. And I love this quote he shared from Warren at the end. Maybe I lied. I thought he did. Was about, did I go by it? Yeah, anyway, it was just about I must be hallucinating. So I thought I read it. I don't know. I guess that's what happens when you're in a cult sometimes. Oh, here. Yeah. Remember Buffett's advice, measure success by business performance and stay patient as the market moves through its unpredictable cycles. So that's that. There was your news early. And I'm back. I'm not advanced enough. I know somebody told me to get another screen so I can see your guys' comments, because when I share my screen, I can't see the comments. But you know what? Hey, that's some news. Here we go. I love this. What do you got, John? The EPD return on capital. Once your cost basis is zero, you pay on all the return of capital taxes as ordinary income or on any future. No, from what I understand, and it hasn't happened to me, is if you buy a share of Enterprise Products Partners at $30 and you don't buy any more, right? Your cost basis is 30. Every time they pay you a dividend, your cost basis starts dropping lower and lower. And when that cost basis gets to zero, every dividend after that will be taxed as long-term capital gains, right? But if you were to sell that, then you pay taxes on the difference between your cost basis and the sale price. So if your cost basis is zero and it now went up to $40 a share, then that's $40 is what you're paying long-term capital gains on, from what I understand. Again, not a tax professional. And it's just a way to defer paying taxes. But the cool thing, and what a lot of people like to do with a master limited partnership, is you will keep trying to buy shares to keep raising your cost basis. So you don't mind that your cost basis is rising, because it keeps you from triggering that event when you have to start paying long-term capital gains on the distributions that you receive. But the other thing that's really cool is if you were to bequeath, how's that for a $20 word? And then he stumbles with a bunch of mishmash mouth soup. If you were to bequeath your shares, pass them on to heirs, they get that stepped up basis. So if you had a $30 cost basis and it dropped, say, from dividends and stuff, and you were at, I don't know, $10, and you die and it's at $40, and you pass those shares on to your heirs, well, now their cost basis is $40. So the meter starts running at $40. So it's kind of a cool vehicle. And why a lot of people like to hold MLPs, which is the mistake I made, inside of a taxable account, because the nature of it is it's already tax advantaged. So it's kind of redundant and suboptimal to hold an MLP inside of a Roth, inside of a tax advantage retirement account. So if you do hold MLPs, you want to hold them inside of a taxable account. And yes, you do get the K1, but with AI and tax software becoming easier to use, more comprehensive, it will do the calculations easier for you. So it's not as big of a pain in the butt as it was back in the day doing the K1s. So that's, I don't know, who knows? We just went through a spiel on on the whole nature of MLPs in about 3 minutes. But what's up? Oh, David Laval. Hey, what's up, man? I didn't get to your email. I did see them. I think I do that. I trigger the thumbs up or something. But yeah, I will within 24 hours respond to the emails. I love hearing from you guys. And this week was a bit of a, I wrote it for my daughters, and I tried. They don't care about investing at all. So I hate to admit it, but I'm having to pay them money to read this stuff. And, I offered them $50 to read Simple Path to Wealth. Now I'm offering them money to read this letter I wrote. And I don't know. It does bother me to say that, but I don't know if it's their generation. I grew up without a father. I had a grandfather that was kind of my dad, but just they don't care about investing at all, and there's people our age too. My brother-in-law has said, I know I should care about investing, but I just don't. I don't have any interest in it whatsoever in personal finance or investing. I just don't care. Like he's big into food and jujitsu and, the gym and lifting weights and stuff like that, which is fine. And I'm trying to tell them too. I'm like, look, just VTI. You buy the whole U.S. stock market, consistently put money in, turn on something called DRIP, dividend. It'll reinvest any dividends. And that's all you need to know. You don't have to do anything, and you'll probably get about 10% returns annualized. So I have to, the kids, right? You would hope that they'd say, like, waited on bated breath, like, Father wrote something, we must read it. I don't know. It's the generation we're growing up in, or they're growing up in, I guess. But, they're going to be okay. Even if I have to force them, if I have to force feed them to get started, it'll happen. So, so today, that's what I was going to tell you, is that we all went to, my girls are going to start playing flag football. It's a new thing at the high school this year. And then we went to one of my favorite stores, Costco. They hated it, but got some free samples of stuff. So, and the cheese pizza, because I'm kind of anti the hot dogs now, because the hot dogs are just, did you hear that? I tried to do it. My brain caught it, and it says, now I know you want to say hot dog, but it's actually, I think, I can't even make my mouth do it. Hot dogs, because I've grown all my whole life. People around here say hot dogs, but I don't know how you guys live without accent or live with accents, because I don't have one. But Steve, you bought more ConAgra after they fell. Yeah, what did you guys buy? Share it below, or if you want to look something up, tell me. We'll do that. They had bad earnings. Well, and that's a good time to buy. And anytime a stock falls, from what I've read, because they had bad earnings, if it looks like a speed bump or a pothole, maybe it's a pothole and it damaged a tire. If you think they're going to be able to repair the tire, get back on the road and get back up to where they were, good time to buy. But again, it's hard to say. You got to know the future. So Janice, you worry that an income portfolio would waste away faster in retirement versus, you know what? You got to look into what Warren Buffett said, because Buffett demolished this, and it is I did a video on it. I obviously don't know off the top of my head what it was, but he took a 10-year period, and the nutshell version of this is if a company paid a dividend versus no dividend, and would you have more money even if you took those dividends, or if you took the income, that if you gave yourself income by selling off little pieces of the shares, what would you have more of at the end of the 10-year period? And it turns out, through his calculations, that it would be selling shares with the company that doesn't pay a dividend. So the reason behind that is that if a company doesn't pay a dividend, they're plowing 100% of the retained capital or the retained earnings into the business to grow the business even faster. Because every time a company pays out a dividend, that's money that's not going back into the business. It's not going to compound into growing the business bigger, quicker, and faster. So, yeah. I don't know if that answers it or if that makes sense, but if the business is growing faster, the share price is growing faster, and even though you're selling off the equivalent amount of shares to match what would have been a dividend, you will end up with more money at the end of the period, because the business growing faster and faster. Now you got to find that business, right? But it was kind of because he did that, because there's always been people pestering and badgering him about, when are you going to pay a dividend? And he would always say his test is, if I can turn $1 of retained earnings into more than $1 of market value, then we're going to just keep the money. Plus, a little bit of hubris, he would say, plus I think I can invest that dollar better than you can. So it just gives, and you want that, right? When you have one of the greatest capital allocators in all of history on your side handling your money, it's kind of silly to say, "Nah, Warren, I don't think you should have the maximum possible amount of dollars to invest back into Berkshire. You should give us some of that money, because, we can probably put it into something else." So that is the super super nutshell version of why I think what you're thinking of, the income version, where maybe you're generating income. Plus, it's more tax favorable too, right? When you receive a dividend, it's taxed twice, right? It's taxed at the corporate level and it's taxed when you receive the dividend, and you have no control over that. But when you sell shares in a company that's growing fast and plowing all of its retained earnings back into the business, you decide when you want that money, how much of that money you want, and you decide you're creating the taxable event. If you don't need it, you don't need as much, whatever, you leave it in. So that's what that was. So I was reading Williams saying it was a well-written letter. Thank you. And it was kind of funny. I actually wrote that this morning because I was telling the kids about it. I'm like, I'm going to put this into writing. And I sent it to them before I sent it to all of you and said, maybe this can help somebody else too. But it's just a cool thing when you buy the whole stock market in a VTI or a VOO, the S&P 500, or even VT, ticker VT, the entire world, almost 10,000 publicly traded companies. It's self-cleansing. You're just getting the, Eddie, I knew you'd say that. You're getting the best. The cream rises to the top. Yeah, David, you pay them $40 a week for a tutor. That's great. We've done that for my kids too. We haven't paid them an allowance, but they get good grades. They make the honor roll. So then we just buy them things. Like I told another bride, they wanted YouTube Premium. So got that for a month and said, we'll see. What else are you going to do for me? The pizza in the hot dog. Dude, we didn't put the hot dog. I know you meant and. I don't mind it. I think they're okay once in a while. The pizza's good. I like it. It's a good price. ConAgra, I don't remember what they did. They have Bird's Eye, right? Yeah, Janice, you're still buying JEPQ. I think JEPQ is one of the OG derivative income funds now. And yeah, Matt, we'll look up WLK. John, it's funny. I'll tie that into, I think a lot of it is the Buffett premium. I think a lot of people don't know what's going to happen. There was a few people that on Blossom that, they said Berkshire is very slow. It moves slow. It's up 15% in a year. But people say, yeah, well, Bitcoin's up 100%, 105% plus. And again, I don't know when it'll end. I don't know if it will end. But personally, for me, I do know that the fundamental laws of economics have not been repealed, that business fundamentals still matter. And I mean, if you're looking at price, you're speculating. If you're looking at fundamentals, you're investing. And it just goes back to what I was saying, guys, with the Robinhood tokenization. I don't like it. I think it's taking advantage of people that are speculating on price. Yes, you can't own shares in OpenAI or SpaceX right now. They're buying an equity stake, tokenizing their equity stake, slapping a price on it, and saying it's on the blockchain to keep track of it. Here you go. Buy these tokens and trade them at will. Have fun. And I think people are thinking they're getting exposure. And I think they even said it's a great way to give retail investors exposure to companies that are private. Speaking of private, Ferrero just announced, right, for $9 billion, $10 billion, they're buying Kellogg. And you know what? They could do that. Ferrero's a private company. They could buy an equity stake, I don't know, a couple $100 million in Ferrero privately. Robinhood owns the stake, and then they can tokenize that ownership stake and tell you, here you go. You now have exposure to Ferrero, a privately traded company. But the problem is they don't disclose everything as private. They don't have to file with the SEC. They really only recognize value when they want to make a sale, or they open up their entire books so somebody can put a value on it. But man, I don't know. So that means you don't own that stake in Ferrero. You don't own You have no voting rights. You have no ownership rights in the tokens that Robinhood is issuing for OpenAI and SpaceX. So that means that you are, and because you can't even look at the fundamentals, you're just speculating on price. So yeah, I don't like that. But whatever. I know SoFi. I read that SoFi is getting into it now. Where does it end? They're going to said I think it was SoFi that said we could tokenize art. They could. I don't know when the end is. You could tokenize the Statue of Liberty. There you go. Hey, it's Statue of Liberty token. You get now exposure to the Statue of Liberty. Here's the starting trading price, and then everybody buys and sells. But what does it mean? You're just speculating on price. So, oh, Jim, come on, man. You're going to make me the word I was going to say suspicious, but that's not right. Self-conscious is the word you're going to make me, Jim, watching on the big screen. But I appreciate it, and thank you. He's coming at you. Jim, I hope you're not on LSD because that would have probably freaked you out. Bubble does hot dogs and the pizza toppings and then back into the bun. Disgusting. Oh, wallet. Yeah. You know what? Hey, any way you can get that money, buying one VTI share every week. I joined you on that this week. It was so antithetical to me. And I was thinking more about what I wanted to tell the kids, how you just buy, but I do it too. I look at the price and I said, oh my God, we're at an all-time high. And it was just in the 250s a couple months ago. So you know what I did? I said, you know what? Screw it. I'm going to stick to my principles. I'm going to put my money where my mouth is. I bought a share of VTI at 308.52, which was, I don't know, 20 cents off the all-time high. And a lot of times it works out. There's studies showing that when you buy things at all-time highs, it's a good thing. It means something's working. When you buy a stock at an all-time high, there's a reason it's at an all-time high. I do realize, like Palantir, probably a little extended. I don't know if I'd buy there, but yeah. So man, you're building that wealth. God bless you for driving Uber as a side hustle. I was going to look up WLK for Matt. We'll give it a minute here. Yeah, I hope you like that little spiel I gave on MLPs because I've had it out with a few people, and I don't know how you guys feel, but I don't think I'm going to do anything else on the high yield max stuff. Just if you want to do it, God bless you. I'm not buying any of them. I think if there's a nasty bear market, a lot of them are going to go away. They're going to collapse. I think they're going to fold. And you know what? I know on Blossom it's getting worse. I don't know how it is on X, but every day now I see more and more things about, you know, the round hills, 0D to E. I think they're getting weekly dividends. I think somebody mentioned something about daily dividends now, and I'm just like, oh my God, you know what? I think you're going to learn the hard way, but what do I know? Some people swear that they've owned something for a month and they've already got all their money back, and now everything is free and clear profit. And I try to ask them, like, well, how does that work? Because when I run the numbers, it looks to me like the position is down. So I think that, I don't know, you're getting your own money back. But I don't know. Anyway, they, oh no, William, and you're one of the ones. Yeah, you bought, that's a Bitcoin treasury company, right? I would say, I really hope you understand what you're buying, man, because from what I understand, a lot of the Bitcoin treasury companies, it's like you would just be better off going to Coinbase and buying Bitcoin. Because I think they're leveraged. Again, tell me if I'm wrong. Somebody educate me, right? I'm just a guy that likes this stuff. But I think that they're kind of trying to take the micro strategy lead on it. Doing what they're doing, or example, where they're leveraging, they're taking loans out on the Bitcoin they have to buy more Bitcoin. So now they have a bigger hoard of Bitcoin, and then they leverage that and take out more money to buy more Bitcoin, which to me sounds like a Ponzi scheme. I think they're even issuing shares to buy more Bitcoin. And I guess it works as long as the price of Bitcoin keeps going up and up and up and up. I wish I had my Macho Man clip, up and up and up. But if Bitcoin crashes 40, 50, 60, 80%, I think it's going to be a nightmare scenario. And I think a lot of people are going to lose money. But I don't know. Does that sound right? Is that how they're doing it? So that's why my thought is, if you buy BTCI and, a crypto winter happens and we see just a catastrophic collapse in the price of Bitcoin, I think there's a potential that, I don't know, maybe you can lose your whole investment if BTCI folds, or it'll be so beaten down because they're going to probably get margin calls if they do have loans, the leverage on that. But if you just held Bitcoin and it goes to $1 from 120,000, you can just hold. You'll still have that Bitcoin. I know I would buy it then if it went to $1, right? Everybody would, but there's a floor somewhere in there. But that's the thing. I don't think if you just own Bitcoin, you don't have any, and I know people, Bitcoin dividends and stuff is paying it. God bless you, Godspeed. But that's yeah, and I see the same thing too. I mean, I'm seeing more and more YouTube video. This guy, they'll say he's making, I don't know, $60,000 a month. And I look at the holdings and it's all these stupidly high yield, high return of capital funds. And they're paying distributions and they keep saying dividends and it drives me up the wall. He's getting dividends. I'm like, no, it's distributions because it's a return of capital in there. And a lot of them aren't even 2 years old. Some of these funds that these people hold are like 3 months old. I'm like, come on, guys. I mean, but you know what? Like you said, Steve, maybe we're the dummies. Maybe we're the ones that are wrong. So, and you're right, Janice. I think it is a lot of young people and they want to get rich quick. It's bad when sometimes they'll look at like your JPQ. I don't even know what the yield on JPQ is, but I want to say, are you at what? 7, 8, 9, 10%. Look at that. Like that's peanuts. Like that's just, all right. So what are we looking up here for Matt? You want WLK and then Janice, was it you wanted thoughts? No, who wanted thoughts on Pep? Good old Pep. Well, yeah, I haven't looked at it in a minute, but we'll look at the fundamentals on it. And William Black, I didn't see, hold on. What was William talking about? Oh, BTCI. Yeah, good one. Again, it won't tell us. We'll just be able to see what Simply Safe shows. But like I said, I don't know if somebody wants to go to ChatGPT right quick and type in, how does BTCI make money? Are they leveraged? A fun thing that I love doing when I make the videos, and I'll type out my script and then I'll put it into AI and say, rewrite this at an 8th grade reading level, because sometimes, and I've gotten much better, I will be grandiloquent. So grandiloquent is the unnecessary use of big, obtuse words to sound educated, to sound smart, by using words that most common people don't know what they mean. That is being grandiloquent, GRANDILOQUENT. And yes, it's ironic, Alanis Morissette, because even using the word grandiloquent is grandiloquence in and of itself. So, Steve was talking about ConAgra. Yeah. Okay. It's ConAgra for Steve. So, I've gotten a lot better at it, trying to not use really big words that a lot of people don't know. So yeah, I'll give him the ConAgra score. Let's do that right now. Need some traveling music. Remember, Mr. Rogers, to the land of make-believe with the trolley. He would always have the xylophone playing and the piano. I miss Fred Rogers. If you don't like Fred Rogers, I'm going to reach through this camera and punch you in the mouth is what I'm going to do. But nobody better talk bad about Fred Rogers. Right? That's being ironic. one of the most peaceful people in the planet, and I'm threatening you with violence if you don't like Mr. Rogers. All right, what am I doing now? I'm goofing around. I don't even remember. There we go. What is that, the A-Team? Hey, everybody. How do you know you're getting old when you just start humming something and you don't know exactly what it's from? WLK, Westlake. Ah, yes. Commodity chemicals. We have another commodity chemical company at a 52-week low. And I don't really remember what's going on with the commodity chemicals, but it's affected Westlake. It's affected not H&R Block, HB Fuller. It's affected Dow, LyondellBasell, and this is one of the reasons why I sold out of LyondellBasell, is because when their revenue, their profits, their earnings are so heavily tied to a commodity that they don't control the price over, that means a big chunk of their revenue is out of the control of management. And I don't like that. So that's one of the reasons why I sold out of LyondellBasell. So what do we got? Westlake Corporation. I'm not familiar with them. I haven't looked, but there you go. It says they're undervalued. And that undervaluation is probably based on the trailing 5-year PE, which is not taking into account future earnings. So you got to be careful with that. But let's see what they've done real quick. They have, slowed the dividend growth down, but they've gone 20 years of uninterrupted dividend, 20-year dividend growth streak. So it looked good. Times, dividend was good. Yeah, so they've slowed the dividend growth down, and they've valued this on the 5-year average dividend yield. Let's see if we do the 5-year average P. So if somebody's watching and you're not familiar, this is Simply Safe Dividends. What they do is they give you two options: the 5-year average dividend yield and the 5-year average price to earnings ratio. The 5-year average is this gray shaded area, so it's looking back from any point in time. So it's looking back, and then they go 10% above and 10% below the 5-year average. And the theory and thought and idea is that if this gray line, which is the price, is above the expected price based on that PE or the dividend, the 5-year average dividend yield, if it's above, there's a strong likelihood that it will come down. So it means that you want to wait to buy. But if it's below, it's like a rubber band and it's going to eventually come up. So it's probably a good time to buy. So, and it's been true, right? So it's gone, you see it yo-yo, and right now it is way the hell below, and it has not been this far below in the last 20 years. So a little bit of caution, could be something unusual here, but if you go by that, and then if we do the PE, it's about overvalued if we look back on the PE, which has been a lot crazier. So anyway, that's kind of what that means. The earnings have fallen through the floor, I can tell, which is why the price of earnings just shot the heck up. But it might be a little overvalued based on that. So yeah, that's yucky. Again, it's a commodity company, and you got to be careful. If it's lumber, if it's steel, if it's U.S. Steel you're looking at, if you're a customer of theirs, you're just probably going to buy the cheapest steel you can find. I mean, are you really going to be that tied to their brand of steel like you would a Pepsi? I don't think so. If I need steel, I'm going to buy where steel is cheapest, unless it's super specialized or something. But if it's just the run-of-the-mill steel, run-of-the-mill lumber. So yeah, anyway, that's the story here. Their earnings and free cash flow is just falling through the floor for Westlake, and you're probably looking at that big dividend yield they got. But yeah, margins are all obviously compressing, so it's a rough time right now for a lot of the chemical companies. Net debt at least isn't that bad, so that's good. So I don't know. I guess it'll rebound eventually, but we don't know when, and we don't know what that's going to do to the business. And a couple more Pep. We'll run through Pep real quick, see if anything's improved. I haven't looked in a minute. Yeah, same thing. They show could be undervalued. Strong credit rating, 93, very safe safety score. And this is on Simply Safe Dividends, by the way. They did reaffirm their dividend safety score on May of 2025 of 93 very safe. So Simply Safe is confident in PepsiCo's dividend safety. They can't be confident in the share price, right? So they're just looking at the fundamentals. Dividend King, they are giving a little bit slower of a dividend raise than they historically have. Yeah, and look at for the bigger companies, that's been pretty tight. When we look at that, look back on the 5-year price to earnings ratio. So, could be a really good time to buy. It should snap back up into that gray range. When will that happen? Nobody knows. Why? Because no human knows the future. But yeah, this is crazy. The 5-year average PE is 24, and it's currently at 17. So the whole consumer staples, though, is just, it's way down. So yeah, if you believe, look at that yield, though. Now, if you can see this, I can zoom in here. That yield is way the hell above the 5-year average. So that's, but there's, that tells you there's some risk. Why is it that high above? You got to know. Yeah, the free cash flow payout ratio is still over 100%. That's no bueno, but it should come back down. So we'll see if that happens. Analysts are projecting an all-time record high of free cash flow per share over the next 12 months. For those of you that are invested, I hope so. And if that does happen, then that stock price should come right back up. So yeah, they've kind of frozen delayed the share buybacks, and sales have plateaued a little bit. So yeah, they're in a bit of a rough patch, but I don't know, their margins are mostly holding. It's just okay. It's PepsiCo. I mean, you're not going to get Nvidia growth, right? Net debt, not too terrible. And they can easily, if anyone's new, watching the interest coverage ratio, interesting metric. This tells us how many dollars of operating income, or EBIT, earnings before interest and taxes, does a company have to cover every $1 of interest on the debt. PepsiCo currently has $16 of operating income to easily cover every $1 of interest on the debt. Because if you can't cover the interest on the debt, you got big problems. And a dividend cut is likely coming, because no company in their right mind is going to pay a dividend when they can't pay the interest on the debt. That's kind of game over. So 2 more here real quick. What's ConAgra? I thought it was CGA. There it is, CAG. Holy smokes. Yeah, I think we looked at them. They have Bird's Eye Healthy Choice, right? Borderline safety score 41 safe, dividend yield of 7.22. That would give me pause. That's the market. Looks like they froze the dividend, right? Yeah, it's frozen at $1.40 a year. I don't remember who asked this, but when you see this accidentally high yield of 7.22%, the stock market is screaming and waving a giant red flag, saying like there is a major problem here, when their 5-year average is under 4% and we're now over 7%. There is something going on that is fundamentally wrong. So big caution. I don't know what the deal is. I mean, free cash flow payout ratio is still low, but I don't know if we'll be able to see right here. Yeah, sales growth has gone negative. Their total sales have dropped. That could be one thing. But yeah, margins are slow. How's their debt? Margins are compressing. Sorry if I'm going quick here. They've been paying down debt. So it could be a good time, man. I don't know. You're going to have to look into it and do a little bit more digging. But on the face of it, that huge, ginormous yield is telling you to be careful. And here we go. Lastly, the Bitcoin high income ETF. My question is, how are they getting that income? 26% yield. And that's all they're going to give us is just they pay every month. Annual payout, $16. I'm going to guess that, let's see, it invests in currency markets. So it's through derivatives in Bitcoin. So they're just, using futures and options. And, oh my God, come on. The fund seeks to gain exposure to Bitcoin through its wholly owned Cayman Islands subsidiary. It employs proprietary research to create its portfolio. Man, that is just, that's a whole hell of a lot of red flags for me. We've got derivatives, we've got options, we've probably got leverage, we've got the Cayman Islands involved. It's a subsidiary in the Cayman Islands. Like, oh my God. Good luck. I honestly, for anyone buying these Bitcoin treasury companies, I really hope it works out. And I hope that 5 years, 10 years from now, I'll be the one saying, like, man, why didn't I buy Bitcoin when it was at $5,000 a coin, or 10 or 20 or 30,000 a coin? So maybe that'll be me, but man, I'm going to be, I don't know. If you want exposure to Bitcoin, just buy the damn Bitcoin on Coinbase and call it a day. Sisam, without looking at it, my thoughts is to just, I'm going to wait on Visa. You know, I'd love to see it closer to $300. So I'm going to wait a minute. What's ABEV, Hassan? What's up, Hassan? Is that InBev, right? Let me just make sure before we. Oh, Ambev. Yeah, I think I just bought one of their products. It's probably, oh, it's actually doing, oh my goodness, it's penny stock. Here, let's share this, because you were so nice to ask, Hassan. Let's see how fast I can run through this one here. So it's $2.35 a share. And let's see, where's it domiciled? It's a foreign company. So the amount is in the Brazilian real. So this might not be a true dividend cut. It could be the currency, the foreign exchange, the currency exchange. So I don't know. We don't know. I don't know enough about it, but free cash flow payout ratio has been dropping. That's nice. Free cash flow per share had been climbing. I guess more people around the world are drinking. Sales up, and I don't know, man. It doesn't look too bad. This is hyper fast. Nice return on invested capital. The margins look good, and apparently it shows they have no net debt. So oddly enough, Hassan, I think Ambev is. I think it looks good, man. I think it looks good. Again, that's just an incredibly quick look through. Oh, Shannon, I'm going to Vegas. I was like, I'm going to Vegas. It's the comment of the show. Fred Rogers would rise out of the grave and choke slam someone to hell if they talk bad about him. I'd love to see that as a movie or a comedy sketch. I wonder if they can do that on VEO. VEO. They have the 8-second clips you guys have been seeing everywhere. I'd almost pay the monthly fee to create an 8-second clip of Fred Rogers rising out of the grave and choke slamming someone. I never watched Captain Kangaroo. I don't know why. I know. He was okay, I guess. I vaguely remember him, though. Lyondell's yield is 9.47. And because of commodity troubles, LyondellBasell they went through bankruptcy. So all the investors around circa 2009, 2010, they got diddly squat. They went through bankruptcy. They all got nothing. They came out of bankruptcy as this new reformed LyondellBasell. So it could happen again. And that would make me nervous. Good for you, man. And again, I'll cheers that. Again, it has momentum. And as long as people keep coming and buying and buying and buying. So I don't know if the tide will ever shift and when. I hope for you, Alfredo, it doesn't. It's just I'm done on the live stream. I'll give my opinion here, but I'm not making any more videos about it. And Chris, we're running up against it. Not much to look at with Walmart, but super solid. It's probably a 99. Let me see. It's a 90, very safe. Yeah, it says it's overvalued. They think you should wait for $59 to $72. But again, just a brilliant company. It's grand. And man, nothing wrong with it, but it's probably a little bit over. Journeyman, what's up? We haven't seen you in a minute. Honeywell, I'll just read you 80 safe. It looks reasonably valued according to Simply Safe. Again, 80 safety score, 1.92% dividend yield, which is a shade below the 5-year average, but they give a valuation area of 198 to 241. I would suggest go to alphaspread.com, see what they have to say. They've made a lot of changes to that, incorporated a lot of AI into it, but what do you guys get? It's 3, right? For each account that you create, you get 3 free look-sees a week, and then it'll reset. So you can use burn one of your look-sees on that. Yeah, and I don't know what it would take, William and Alfredo, but if you guys are making money, fantastic. So, you know, that's good for you. The Cayman Islands. Yeah. That's funny. I'm reading that. I'm like, oh, gee, what could go wrong when you have a subsidiary located in the Cayman Islands that uses highly leveraged derivatives to create income from Bitcoin? I don't know. It's just when you put it in that way, it sounds a little. Yeah. And have you seen Jeremy from Dividend Stockpile? I think he's talked to some of their people from Neos. I know they've been making the rounds. Won't happen with me because I would, I don't know if it would be a gotcha, but I would be coming at it from such a highly skeptical point of view. It probably wouldn't be in their best interest to do that. But you know what? If it's working for you guys, God bless. Yeah. What is their return of capital, or how's the net asset value? I wonder if I could find that really quick, because this is dividend related, right? You guys are buying this. So I'm trying to type in their net asset value chart. I don't know if Neos will show it, but hey, if you want to poke around the website with me, see what I see, because it's probably a little better. Oh, Janice, thank you. But I don't know if you, Marsh & McLennan, Aaron, they raised their dividend. Yeah, the last video I did, as it was not a good one, but I thought it was fun to show Data Roma. I have a list, and that's been on there for a long time. What was I looking for here? So an expense ratio of almost 1%. That's really high. I was looking for, what was I looking for again, guys? I think I was looking for the net asset value. I don't know if they show it. Some of these funds do show that. Yeah, it'll say fund performance. This is probably boring to a lot of you. I guess I could do. Yeah, I won't do Control F. Yeah, look at this, guys. This is interesting. So here's their holdings as of the 14th. 67% is in the United States Treasury bills. You've got the VanEck Bitcoin ETF, which is ticker HODL, is 24%. And then you have some derivatives, some option contracts, what I believe those are. So I don't think they actually own any Bitcoin. Their only Bitcoin exposure is through an ETF. So I don't know, that could be wrong, but yeah, I don't know. I don't see where oh, here we go. Here. Now this is interesting. Maybe I'll do this with you guys just because we can all learn together. But the most recent distribution by the fund, 95% was a return of capital. But I think this is interesting because if I click on this, and I don't know if they will show it, but in the 19A-1 form, I don't know where it is. It should, this is going to get too in there in the weeds. It will show what percent is from, now let's stop this. It'll show, this is probably boring as hell. It'll show what percent is from income that the portfolio generated, what percent is return of capital. But the key to all this is if the net asset value is dropping. And so to some degree, if the ETF HODL was dropping in share price, then because that is one of the underlying components to BTCI, that could cause the net asset value to decline some, right? So that's why you always have to know what the underlying is. And, I guess if those treasuries drop, that could also cause it so there's a lot of moving parts. And I don't think they fully know. Everything's an estimate until the year end is when they release all that stuff. And again, it's really complex. There's a lot of moving parts. There's a lot of guesswork. There's a high expense ratio. And I just think that they're going to make their money, right? That 1% expense ratio, they're going to get paid no matter what. So I just hope that a lot of people don't get burned on these things. So yeah, and they may be, Alfredo. They may be. They're in the business of making money. It is a business as well. So yeah, Janice, I I appreciate it. That's thank you. Oh, I've been buying more SCHY too, and I'm going to keep buying more because I like SCHY. It has more concentrated exposure into what should be better quality dividend paying international companies instead of some of these that own, 200, 800. Some of them just buy any international company that pays a dividend. So I think this will be better over the long term for dividend growth and the quality, again, of the underlying. When you're buying any ETF, I don't care what it is, any ETF, you need to know the methodology for what it uses to select, to either include or exclude for the underlying. And the underlying is what is the engine of that ETF. And I don't think a lot of people do that. I think a lot of people just look at the yield and they say, dang, that's a freaking crazy high yield. I'm going to buy that because it says Bitcoin. I see the word Bitcoin, I see high yield, buy it. And I don't think a lot of people understand, but VYMI is probably okay. I just thought, Steve, for my my personal flavor, right? Some people like tall, skinny redheads. That's not mine. No, that is mine. I was putting myself in the shoes of a conversation I had with a colleague one night over some drinks. I said, it was Joe. I was 19. I was a teenager. And one of my friends was saying, like, oh, you like all the tall, skinny girls. He's like, my friend was Mexican. He's like, oh, those short, thick girls. Got to be thick. And I was like, really? You like that? And that's when I realized, oh, there truly is somebody for everybody. So that's, oh, she's not watching. She can hear me though. She's heard she probably could have told you that story better than I could. She's probably heard it so many times. So, like she says, sometimes I don't have to watch the show because I live with the show. So that's funny. But yeah, oh my God, well, that's a good way to wrap up the show, right, Steve? So, again, dude, you guys are the best, and feel free always. I don't know, Russ at DapperDividends.com. Share what you want to say. I'm tongue tied now. It's at the end. I'm all spent. So yeah, you guys are the best. Thank you so much. And I really do look forward to this every Sunday night when I'm in town and hanging out with you guys because I learn too. So thanks. If you enjoyed it, give it a thumbs up or not. I'll be fine, but I'll be here next weekend. So long, everybody. I'll see ya. Why are we not playing? Uh-oh. Well, that's news to me, everybody. I guess we're this is how we live and learn. Something must have happened. It says, here we go. Bear with me here because it said something about with the free plan, only one video clip is allowed. So I'm deleting all the video clips I had in here. And now let's see. Hopefully this works. If it does, so long, everybody. Oh my God. Well, I don't know what's going on. I can't do it. So God bless you, StreamYard. They want more money, and we can't do it this week. So such is life. So I guess we're gonna end it there, and we'll play around with it. So long, everybody.